folks, and welcome to the Rahul Nair Finance Show. You're listening to the Daily Deal Room, from startups to stock markets, where we decode the business buzz of the day, crisp, clear, and to the point.
Today is 22nd September, 2025. Before we begin, here's a quick disclaimer. This podcast is for educational purposes only. It is not a buy or sell recommendation. Always consult a financial advisor before making investment decisions. Let's discuss how the markets performed on 19th September, 2025.
Here's our roadmap for today. We'll start with the market wrap, then check out Paytm's game-changing new credit feature. After that, we'll hit the big headlines in policy and banking. Then we'll do a deep dive into the incredible story of Balaji Wafers, and we'll finish up with the latest startup deals and a key term you need to know.
Okay, kicking things off with the markets. Today felt like a tale of two different worlds. While Indian markets decided to take a bit of a breather, Wall Street was still full steam ahead.
And you can see that split right here. The Nifty and Sensex both closed in the red. Looks like some profit booking after a good run. But over in the US, especially the tech-heavy Nasdaq, it was a pretty strong day. This kind of divergence really gives you a feel for the global investor mood right now.
So let's follow the money. Where did it go? Well, foreign institutional investors, the FIIs, they were net buyers, but just barely, only about 390 crore rupees. It's not a huge vote of confidence, more like a cautious dip of the toe in the water.
But now look at this. This is the real story of the day. Our domestic institutional investors, the DIIs, they came in with some serious conviction, pumping in over 2,100 crore rupees. This shows you just how strong the local confidence is, and frankly, it's what put a floor under the market and stopped it from falling any further. The home team really held the fort today.
All right, next up, a really big move in the fintech space that, honestly, could change the way millions of us make small, everyday payments.
So Paytm is basically plugging its buy now, pay later feature directly into the UPI system. What does that actually mean? Think about it. Every time you scan a QR code, whether it's for a cup of coffee or your groceries, you could now have access to an instant, small line of credit. This is a massive step in making digital credit a seamless part of daily life for tons of people. It's a real game changer.
Okay, let's get to our headline segment. We've got three huge stories today that are really making waves, affecting everything from our massive IT services industry to the Indian economy as a whole.
First up, a story that definitely sent a jolt through India's multi-billion-dollar IT sector. A proposal from the Trump administration started floating around, and the headline number was just staggering. A $100,000 H-1B visa fee? Yeah, that got everyone's attention.
The immediate fear, of course, was a massive hit to the bottom line. For our IT giants like TCS and Infosys, who depend on the H-1B program to get top talent on site in the US, a 100-fold fee increase could have easily wiped out 10% of their profits. The uncertainty was huge.
But then, the details started to come out, and the fine print, as it often does, changed the whole story. Turns out, this fee is a one-time thing, not annual, and more importantly, it only applies to new visa applications. So anyone already on an H-1B or just renewing is totally unaffected. You can almost hear the collective sigh of relief coming from IT hubs across India.
All right, let's shift gears back home. India has just officially kicked off the next big phase of its tax reform journey. GST 2.0 is now live, and the whole point is simplification, boiling down a whole bunch of rates into two main slabs, 5% and 18%.
And as the Prime Minister said, the government is really positioning this as the fulfillment of that one nation, one tax stream. The big idea here is to make the system simpler and more predictable for businesses, which should, in theory, help speed up economic growth.
And there's more good news on the economic front. India's report card just keeps getting better. We've locked in our third sovereign rating upgrade this fiscal year. This time, it's Japan's Rating and Investment Information Agency, R&I, bumping us up to BBB+ with a stable outlook. That's a huge vote of confidence from the international community.
So you might be asking, what's behind all this optimism? Well, it's a really powerful chain reaction. It all starts with strong demand right here at home from Indian consumers. That leads to better tax collection for the government, which in turn helps them manage their finances and lower the deficit. At the same time, our banks are in the best shape they've been in for decades. All these pieces together are painting a very strong picture of our economy.
It really comes down to a tough four-part challenge.
First, they just don't have the scale. Without a huge branch network, it's hard to get those cheap deposits. That leads to higher operating costs. Add in some tough regulatory hurdles for expansion, and you can see why their global headquarters are deciding to shift their strategy.
And this is the result: a major realignment in the banking sector. Our domestic banks like Access and Kotak are seizing the opportunity, snapping up millions of customers and loan books. Meanwhile, the foreign banks are pivoting to focus on their core strengths, handling big money for big corporations and wealthy individuals. The entire landscape is becoming more specialized. Okay, from banking, let's zoom into the fast-moving consumer goods sector. We've got a fantastic case study of a regional powerhouse that's not just gone national, but is now on the radar of some of the biggest investors in the world.
The buzz is that private equity firms and even global FMCG giants are lining up, hoping to buy a piece of Balaji Wafers. And for good reason. They are the #3 player in India's absolutely massive 43,800 crore rupee salty snacks market. They've carved out a solid 12% share, right behind behemoths like PepsiCo and Haldiram's.
So, how on earth does a regional player do that? Well, their secret sauce is all about being incredibly efficient. They go straight to over 2,000 formers, cutting out middlemen and ensuring quality. Their pricing is genius. Instead of raising the price of a 5 rupee pack, they just tweak the pack size a little. They've built this incredible distribution network into 4.5 lakh local Kirana stores. And get this, they barely spend anything on advertising. They let the product do the talking. It is a masterclass in how to run a lean, smart business.
So what's next for them? The potential is just immense. India's snack market is forecast to more than double in the next decade. If Balaji sells a 10% stake to a big investor like Temasek or maybe even a competitor, it could give them the capital to fuel their next big growth chapter. This could be the first step towards a future IPO or maybe even a full buyout down the line. And finally, let's wrap things up with our startup segment, where we take a quick look at who's raising money and break down a key term you should know.
You can see a very clear trend in the latest funding rounds. Investors are placing their bets on the future. We've got money flowing into EV charging, deep tech like space technology, and climate-focused carbon projects. The signal couldn't be clearer. The smart money is chasing sustainability and cutting-edge tech.
And for our term of the day, let's talk about the anti-dilution clause. It sounds complex, but the idea is actually simple. Imagine you're an early investor and you buy 10% of a startup. A year later, the company needs more money, but has to sell new shares at a lower price than what you paid. That means your original investment is now worth less and your ownership gets diluted. Well, this clause is your safety net. It basically says if the company sells shares cheaper later on, you get extra shares for free to protect your original ownership percentage. It's an absolutely critical piece of protection for early-stage investors.
That wraps up today's episode of the Rahul Nair Finance Show, brought to you under our daily series, The Daily Deal Room, from startups to stock markets. If you like this episode, don't forget to like, subscribe, and share with your friends, colleagues, or anyone who's into business and investing. We'll catch you tomorrow with more updates. Until then, stay curious, stay invested.